Hello and welcome back to Explain the Charts. Today, March 6th, 2025, we're dissecting Intel, INTC, stock, looking at both the latest news and the corresponding chart data. Recent news highlights include concerns about potential revisions to the CHIPS Act under a possible Trump administration and rumors of Elon Musk buying Intel, adding to the uncertainty. There's also positive news, such as NVIDIA and Broadcom testing Intel's 18A chip fabrication process, which could be a big win for their foundry business. Let's jump into the charts and see how these events are reflected in the price action. We'll examine different time frames to get a comprehensive view of the potential short-term and long-term trends. Looking at the daily chart, we can see a significant drop recently. The news regarding the CHIPS Act uncertainty and Tesla possibly not buying may have contributed to this downward pressure. We need to identify key support and resistance levels. A potential support level is around the $18.50 to $19 range, which acted as a floor in the past. If the price breaks below this, we could see further downside. On the upside, a key resistance level lies around $23, a level where previous rallies have stalled. Now, let's narrow in on the recent price action. We can see significant volatility around the time of the reports about TSMC's expansion announcement, which is around January 26, 2024. The volatility continued into February, with the price fluctuating between 22 and 28 with high trading volume, likely associated with the varying news events. More recently, there was a large price move to the downside in early March of 2025. Switching to the 1-hour chart, we get a more detailed view of the short-term price movements. We can see that there was a short-term period of increase from the end of January through the middle of February and subsequently the downward trend. The price is currently trading around $20.81 as of the last candle, a crucial point to watch. If it breaks below, we might see a test of the lower support levels. On the 15-minute chart, we can see the very short-term fluctuations. Pay close attention to the volume on these moves. Higher volume confirms the strength of the trend. If you're a short-term trader, look for potential breakout patterns and candlestick patterns to signal entry and exit points. Taking everything into account, it's difficult to make a strong bullish or bearish call. The short interest rising on the 15th of February shows that many think the price is going down, but this can be misleading. If the CHIPS Act worries dissipate and the foundry business gains traction, a bullish scenario could play out with a rally to the $25 to $28 range by the end of Q2 2025, which I would put at 30% likely. On the other hand, consistent bad news about competition and sales could push the price down to retest $18.50-19 with 50% likelihood, and possibly lower, by the end of April 2025. For now, my prediction is consolidation between these two with 20% likelihood, with $20 to $24 price range for the next 2 to 3 months with high volatility, and it remains crucial to monitor news flow and price action closely. Key things to look for are Intel's next earnings report, any new developments in the political landscape affecting the chip industry, and adoption rates of their 18A process by major players.